Good evening. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for what I expect to be, with the exception of Wednesday afternoon, a fairly quiet trading week. And the reason is so many people are going to be gone for Labor Day. Today is Monday. We are the 26th of August, 2024, getting on after 6:10 p.m. Central Time. A bit of a correction hitting tonight in the stock indices and in the metal markets. Now, you did go up in the Dow and you hit an all-time high today. You're backing off a little now. I would expect that these breaks, as you'll see in a minute, probably get some buying support tonight. Wouldn't surprise me at all. Bonds and notes slipping back a little bit. You know that on Friday, the Fed gave the green signal to go with rate cuts. And the Fed has turned its focus, if you paid attention to that, to the labor market. The 4.3% unemployment got the Fed's attention, the committee. And Fed Chair Powell said they don't want to really see this market weaken much more. Okay, he didn't talk too much about inflation. He said it's going down, it's doing what the Fed wants, and they will stick with it till it gets to their 2% goal. So traders are interpreting this in a series of different ways. The question is, how do they deploy money? Now, keep in the back of your mind that typically, historically speaking, and you can go back, by the way, to World War II, September's the worst trading month of the year for the stock indices. Worse means the market typically drops in that month. Is it a huge drop? No. So don't get excited by that. If you smooth it out over the years, it's about 3/4 of a percentage point. But to get to that number, you have bigger numbers and smaller numbers. Is the Fed going to be able to do what nobody thinks it can do and achieve a soft landing is another question. I am of the school that they will. Now, I'm in the minority because in the 60s and 90s in recent times is the only two times that it's able to do that. But I say the pandemic was unique, and the pandemic has masked the problem that people wanted to go back to work. The reason they didn't work, and unemployment and everything, the Fed had to make the moves, was COVID. Now, I am concerned about Mpox. I understand that the U.S. has plenty of vaccines for it, but if you're watching what's going on in Africa, it's not getting enough play. And it is now mutating into other forms, and there's a lot of people there that are getting themselves into the problem. It hasn't spread into the U.S. in a big way. We hear a case here and there, but it's something I'm paying attention to. I still pay attention to COVID. If you're reading California, it's basically a large part of the state has now been swarmed by it, and in Illinois. And I, as you know, caught it, and I'm just about over the coughing spell from it. I feel great, but it knocks you out. This was the hardest one that I had, and yes, I've had all the vaccines. All right. So as we look at the market, a bit of a correction here. The metal's correcting. Dollar stable. That's about all that you can say. Foreign currency markets back and forth. I still like the euro over the dollar. The grain market, we saw the bean market rally back a little bit today. Wheat and corn were down. Harvest is around the corner, and crops look good. There was a little crop deterioration. If you looked at the USDA report at 3:30, I think it came out at 3 o'clock this afternoon, and it showed a little bit, but you're far along. You're going to have to get a lot more. We have 3 days of big heat hitting the Midwest. Chicago was in the 90s today. It was 90s, and that's without humidity index and all thrown in. Yesterday, it'll be that way tomorrow. Schools were let out early, and they had to be careful what they let the kids did. And yes, children in Chicago, a lot of areas, are back in school. Now, when we look at the energy market, you had a contained skirmish. I want to call it that. It was large. Hezbollah's declaring victory and Israel's declaring victory, and I like that. Let them both have a victory and let this thing not go further. Iran hasn't said anything. It's just sitting back watching what its proxies are doing. But the whole idea here is if you can get a victory and you stop this from getting any further, it would be great. the key is in Hamas, they're probably waiting to see if Israel gets drawn in on other fronts, and if they don't, and they can't get Iran pulled in or Hezbollah pulled in deeper, maybe Hamas will come to the table, because I think that their holdout has to be that they're hoping that this thing spreads, and it's not spreading the way that they want. When I take a look at the E-mini S&P weekly chart, close only, you can see the market's back up into a resistance area. Very clear. When you come here, think of it this way. You could make an argument you've got a shoulder right through here, a shoulder here. Do you see them? A head here. If the market gets over this level, you then flip this over, and that's how you get to your next numbers. Now, think about that. Play with it on your own charts. You can say the bottom's in the 5,100, the top's around the 50. Well, you can even say 5,700. That'd be 6,300 is the difference. No, 6,200. Up a little bit higher than there if it went going. What would get it there? Well, if you got over 6,000, you probably would trigger the FOMO, fear of missing out, and everybody rushes in. I'm not saying that's going to happen right now. I'm giving you the what ifs. Do we understand that? That's my job here. But I do see that pattern on the chart. When we put on the swing lines, the pattern is also one of higher lows, higher highs. You double topped at 56.69. You hit that today and you hit that on Thursday. Both numbers the same. When you see where the moving averages are, they're lined up bullish. You've got the shorter term 18-day over the 100 over the 200-day average. The Bollinger Band, remember when we were saying last week, I said, right through here, I said, it acts like it's going to want to kiss, and the girl's running away. She's not going to let the market get up there, and that's what I still think. Now, will we pull back? If you're going to get an indication that there's a problem, I think it's going to be the low of Friday. If Friday's low is taken out, that hurts the market. And if you take out Thursday's low, which was the outside day down, you start adding more impetus and you could be coming back down here. So those are the numbers I don't want to see until they're taken out. I think the bulls are in control of the market. You have the embedded reading, which tells me on the pullbacks, the traders are buying this market and they bail if the red line closes under 79. The NASDAQ, what's going to affect this? What is the close of business on Wednesday? NVIDIA's earnings. It's widely expected they're going to be good. How good's the forward guidance going to be? What are they going to say about, I think it's called Blackwell, their new chip? Are we going to get another delay? Are they going to say, well, you have to take the current chip and that'll do it until we get this fixed? We don't know. There's a lot of unknowns. And the market, if you look at the options, when I looked at them today, it was plus or minus 11% move off of that. Well, how much is weighted into the NASDAQ, SOX, and the other semiconductor markets from that? So you got to think that through. Support in this market's back down at the 19,111 zone. Like the S&P, you have an embedded reading. Are you embedded in the Dow? So let's look at this. You cannot count tonight because we don't know where Tuesday's going to finish up. But Monday, both numbers finished over 80. Friday, both were over 80. Not the same on Thursday. So tomorrow's the key day to embed. Number two, the market is backing off. If it embeds, it likely does it in here, the targets would be the upper Bollinger Band if it does it. I'm not in the same camp at all in the Russell. And today's the day I think professional money came out of this. You got to the first challenge of a Bollinger Band, not off of a thin Bollinger Band set like this, which often one way or the other you come out of. This is after a wide band. I think the market backs off a bit from there. We'll see if I'm right. I'm certainly not saying be bearish, but I am saying I think professional money came out of this market today. Then we get over to the 10-year note. The momentum is up. The trend is up. Support's in the 113 zone. You don't want to take out 113.05 and a half. If you do that, a bit of a problem in the market. When I look at the 5-year notes, it's the 109 even zone that I'd be watching there for support. And you don't want to get under 108.26 and a half. If those things happen, I think I go back to a neutral stance in the market. But right now I've got the bull stance. The dollar is still in a thrust down with a bearish embedded reading. I think good rallies up into this area probably get sold rather heavy by the pros in the market, if you can get that bounce. And in the eurocurrency, I think that breaks into this low 111 area, 111.50 in that zone there. That's where I think you're going to find your support waiting. You have the bullish embedded reading here. While the British pound's got an embedded reading, it's over the upper Bollinger Band on the weekly chart. When you come to Bitcoin, today was the day, if you were sitting next to me, I give you the elbow like that and go, why are you hanging in there? I said, this is where, as a futures trader, you'd want to take some money off the table. It's the first challenge of the 100-day average in the Bollinger Band, and you're overbought. In the crude oil, this is a V formation, back and forth here. And what's going to move the market, I think, was the market was hoping that as a bull, you're looking at the news going, well, this situation between Hezbollah and Israel is going to spill over. Well, it hasn't spilled over. So we'll see what goes on there. I don't know if the Ukraine war is getting enough attention, but Russia launched today, I understand, about 200 missiles and drones and took out a lot of the electricity in Kiev and other key cities there. So that battle's still going very aggressively. We'll see what happens here. People are worried that until there's peace, you want to keep a bid in the energies. I see that. But all you've been doing is this. Do you disagree with me? If you're saying that this has been trend trading, no, I don't agree with you. The market's been going up and down in just waves and not really in a trend. In WTI, it's very, very similar back and forth action. Gasoline, well, this is your resistance. The last big driving holidays right now. I was on the road this weekend. I had a family member that had a accident. He was on a scooter and got hit by a car. That's why he didn't see me this weekend. And yes, he's still in the hospital. It's not good. He'll make it, but it's not good. Broken arm, ribs, terrible situation, and didn't have to happen. The driver wasn't paying attention. My relative was. Didn't matter. You can't get out of the way of a van. To make a long story short, though, I think that's where you end, and I think we're going to want to turn our attention to this market, natural gas and the heating oil, because they'll start taking over. Not yet in nat gas. We're at that funny time of year where you're coming to the end of summer, then we get beautiful mild weather, so you're not going to turn on that heater in most parts of the country up until you get into the October time frame, but you also won't be burning your natural gas for your air conditioning if you use that. You're getting oversold. I question if you're going to go back to the 204 level on this particular drop before you get a bounce in it, but we'll see what goes on. So you put this all together, you try to come up with the game plans that are going on. Remember, tomorrow you don't have a lot of key reports in the marketplace. You got Redbook Group, Case-Shiller, the Conference Board numbers coming out, and API. None of those are market-moving numbers. PCE on Friday will be important, but it's next Friday when we get to the jobs report that I think you really want to pay attention. So in between then, get some of our free offers. Learn what to do. Our trading platform. You want to try my platform out? It's right here. Our futures trading kit that's got in it the Arun indicator, the courses that I offer for free. It's got a lot of what we have. You want to get our QT charts, Modern Trader, profitable trading strategies and tips from the pros, how you work with different things in these markets. This is something important, the pivot point videos. But to get any of these, you just go to iraepstein.com, free offers. You click on the blue, and when you do that, it puts it for you into a cart. At the bottom of the page, you're going to be asked for your name, your email address, and if you have any questions for us, fill it out, and that's how you get about it. Again, IraEpstein.com for your offers, or just come up here with your cursor, give a click on an icon that'll show, and that'll take you there. I'm Ira. I'll catch up with you all in the morning. Take care.